So we're going to talk about what is technical analysis. So technical analysis, it's more an advanced subject, it's more around trading rather than investing, but it's really important to understand this, the way that technical analysis can improve your investing. So first of all, as I said, it's trading, not investing. So if you're looking to invest, first of all, you need to understand why. Why are you investing? We talk about having a life plan, know where you want to get to, your aims or objectives. That's why. Then you need to understand what is investing. We talk about understand the fundamentals of companies. So we talk about having a football formation, asset allocation, and build out portfolio around you. And then the third thing is when. So the third thing about investing is when do you invest? So this is where technical analysis comes in, and I'll give you a tip at the end that will basically mean that you don't ever have to even worry about technical analysis, but it's still super important to understand kind of how this can affect your investing. So we're going to talk about the momentum of technical analysis. We're going to talk about support and resistance, and we're going to talk about trend lines, and then the tip at the end, how to kind of tip to get around using technical analysis. So first of all, what is technical analysis? So technical analysis is trying to predict what's going to happen to the price of a good or stock. So looking at lines on a screen and basically trying to look at kind of patterns and kind of ups and downs of the market to try and predict where the price is going to go next. So one strategy to this is using momentum. So we talked before about the laws of physics, how Newton's 3 laws of physics can help your investing. So with technical analysis, so momentum is a real good way of kind of seeing where things are going to go next. So if things are moving in a direction, so the force behind it is moving in a direction, it's going to need a greater force to kind of stop it moving in that direction. So if the markets are moving up, it's going to need that kind of momentum behind that force that's moving up. It's going to need a greater force to hit before it moves down again. This is kind of the laws of kind of physics. So momentum, if you look at a price will keep going up until essentially something greater is going to hit it and it will come down again. This comes into kind of the next point. So using support and resistance. So what is support and resistance? So it's kind of the resistance is like the ceiling of a price. So if you think of the FTSE 100, if you go and Google graph FTSE 100, you can see that there's certain points where it will kind of peak and it won't go above a certain price. So humans love big round numbers. So there's, so say if the FTSE was at 7,000, can quite often be some resistance of price won't go past this kind of line, and this is the resistance. This is the ceiling. It's kind of capped at the price. And on the flip side of that, so the support is the bottom. So sometimes the price won't go below this kind of support line. This is like the ceiling. So think of it like a room. So a graph will move up and down, and once this resistance has been broken, it kind of breaks through this ceiling, and then it kind of means that it's more likely to kind of keep going up because that momentum's kind of gone, kind of that energy is kind of going with it. This is kind of support and resistance. So you can kind of look at the FTSE 100 as a good example of this. So, and then the third thing is looking at trend lines. So they say in trading, let the trend be your friend until the bend in the end. But it's a bit of a cheesy line, but it kind of gives you kind of what you're looking for. So this is like, the trend lines are like support and resistance lines. So it's going to move in trends. So, yeah, and if these trend lines break, then it's more likely to kind of move with that kind of, that momentum is going to kind of continue past these kind of trend lines. And it's, yeah, coming back to the laws of physics, like, that momentum is going to keep going. So markets, in general, move up. So the businesses kind of move up through time. There's always going to be kind of new problems, new businesses growing that are kind of, so the kind of momentum is generally always up. So to go against or to short the market, which is kind of trying to make money when the market goes down, it's almost going against the fundamental nature of the market. I'm not saying you don't need to do it, but this is more kind of advanced kind of technical analysis, more into trading than investing. But it's more kind of to make you understand kind of the other kind of things you need to look for. So what's his tip to make all this irrelevant? So we talk about paying yourself first. So if you pay yourself first and drip feed money into the market each month, then you don't need to even time the market. because you're using what they call pound cost averaging. And so when the market, you're putting money in every month, and when the market's high, you're putting the same amount of money in, and you're going to buy less stock. But if the market, say the market crashes, and you keep putting that money in, you're going to be putting the same amount of money in, but you're going to get more stock or more kind of assets for less price. So people are always worried about market crashes. The media love kind of building up that frenzy, but it can actually be a good thing if you're putting money into the market each month. If the market comes off, then it's like a winter sale, but you're getting the same thing, the same asset, but for a lower price. So using these kind of strategies as a whole can be a real great way to improve your investing for the long term. So just to summarise, what is technical analysis? It's essentially trying to predict what someone else is going to pay for a price of a good or a stock. So we talk about momentum, like the laws of motion, what is resistance, what is support, and people loving round numbers, and trend lines, kind of spotting these trends and kind of knowing what's going to happen next, and then drip feeding that money into that market each month is a great peace of mind thing that you don't even need to worry about kind of the ups and downs of the market every month, because you're, for the long-term investor, you're drip feeding in every month and you're getting that pound cost averaging.